watching the Fox 5 Morning News at 7.
More cars are getting repossessed all across the nation. Chase Wilsey from Wilsey Asset Management joining us now with some reasons why these numbers are going up. Why? I mean, what?
Yeah, I mean, I was kind of surprised by this. The number of cars repossessed last year was 1.73 million across the nation. Okay. That was the highest since 2009, and obviously 2009 was a very difficult time period. Right. And I did look at this because I was curious. I'm like, well, you know, is that a lot? How much is it relative to the total cars? I didn't know this. There's almost 300 million active cars out there. So, I mean, there's a lot out there. Don't think that, like, everybody's car is getting repossessed. But the number that's, again, scary is the fact that it is the highest since 2009, which is a challenging time in the economy. And I think the big reason that we're seeing this is we are taking part in what's known as a K-shaped economy. And what that means is the top-end consumer is doing really well, but there is really some cracks starting to be shown in the bottom-end consumer, and they're really having a hard time with these payments.
It's unbelievable. The average car payment, though, with these current interest rates, and you realize suddenly you blinked and the average car is like $50,000 and the luxury vehicles are $100,000, and now that's been normalized, and obviously with that, higher prices for your payments.
Yeah, and I mean, you bring up that average car payment. I was blown away by this. The average car payment now $750 a month. 20% of all loans, leases, over $1,000 a month. I mean, we're talking.
1 in 5 is paying more than $1,000 for a car payment.
Yeah, I mean, that's more than I paid for rent in college and my first few years moving back home. You know, it's like, wow.
Who is impacted the most? You mentioned this K thing, which is a fascinating study in and of itself, but who is impacted the most by the high interest rates for these loans? Yeah,
I mean, obviously the difficult part is when interest rates get high, if you're what we call a subprime borrower, those are going to be your people credit scores under 650, their interest rates are going to be even higher than people that are more credit worthy, I will say. So they are more impacted, and they are having a hard time. Again, you saw the repossessions, but the other difficult stat that we're now seeing is 6% of all of those subprime borrowers are delinquent more than 60 days. That was the highest that I saw on record going back to 2000. And the other issue that you have to keep an eye out on here as the economy as a whole is 14% of all cars that were sold in September were sold to people under that subprime rating. So that is, again, something that is...
So you start doing that math, and that's a problem. Which loans are the safest?
I mean, again, you're going to have your prime borrowers. And from a consumer standpoint, right, you want to shop your loans. I always tell people, don't go to the car and buy the car first. You want to go talk to different loan places, talk to credit unions, talk to different loan providers. That way, when you go in to buy a car, you have a good understanding of what is your best interest rate. Because I did this a few years ago, and I shopped the loan first, and then I went in and I bought my car, and they said, we can actually do 2.99. And I said, oh, that's better than the loan I found. I'll do it. Better to go in with more information than less information. But again, from a lending standpoint, prime borrowers are going to be where the safer ratings are.
Where are the interest rates going to be in the next couple months? We talked to Ken Kaplan about home prices and home loans, and it's very similar. It doesn't look like they're going super low. Or where do you see them going in the next couple of months?
Well, I mean, that's a difficult thing, right? Not super low, but we've gotten so...
I mean, they got to a point a couple years ago where it's like, wait, what? Like, you could get a home loan for like 2-3%. It's like, what?
And we are not going back to those levels.
Yeah, that's what he said, never.
I always use the 10-year Treasury as kind of the broadest, you know, kind of basis for lending. That right now did dip back under 4, but I don't think that's going to dip back under 3 anytime soon. I think you're going to see in a range of 3.5, 4.5. So I think auto loans, they're kind of a little bit more challenging because they're not a short-term loan, but they're not a long-term loan. I think you could get a little bit more benefit in auto loans for the next year, but don't expect it to fall, you know, 2%, let's say.
Yeah. I'm curious from all this, are leases up as a result? Because then people figured, I've seen commercials and there's lease prices that are pretty low monthly compared to what we're talking about here. Are leases up as a result of all this?
You know, I wouldn't be surprised if leases have grown, and a big reason for that is sometimes the lease payments are going to be cheaper than the car buying process. So that could be a way that, you know, I'm going to say salespeople, car manufacturers are using to get people into new cars is lowering that payment. So that would be an interesting study to look at to see if leases are growing.
I didn't have this car thing that I like cars, and I could have just had my same car that was paid off 10 years ago. Chase?
Hey, I still drive my 2019 Chevy Silverado. I'm good with that for a while. I'm not a car guy.
Lucky you. It saves you money. That's why you're the financial guy. You know you're smart. Chase, thank you as always. Good talking to you.
Fox 5 Weather, sponsored by